Unit 4, the theory of double entry. Section 4, the effect of transactions on the statement of financial position. By the end of this session, we should be able to show the effect of transactions on the statement of financial position and redraft the statement of financial position after every transaction. Effect of transactions on the statement of financial position. Every time a transaction occurs, the element of the statement of financial position change, but the basic equality remains. What it means is that the elements of the statement of financial position, which are assets, liabilities, and capital, will change whenever a transaction occurs. But the accounting equation, which is asset equals to capital plus liabilities, will not change. What it means is that the total of the assets will equal to the sum of the capital and the liabilities. Let's now look at some examples. Kofi Nsia started business with 20 million Ghana cedis cash. Here, an asset cash is increased by 20 million Ghana cedis, and capital is increased by 20 million Ghana cedis on the other side of the statement of financial position. After the transaction, the statement of financial position will appear as follows. Assets in the form of cash is increasing by 20 million Ghana cedis, whilst capital, which is the contribution of the owner, or the money that the owner started the business with, has also increased by 20 million Ghana cedis. So in this case, cash is increasing, or asset is increasing, and at the same time capital is increasing. So we see that the asset will equate to capital. So asset will now be equal to capital. Let's look at this other transaction. Kofi Nsia paid 50 million Ghana cedis of the cash into the business bank account. Here the effect is that an asset, bank, is increased by 50 million Ghana cedis, whilst another asset, cash, is decreased by 50 million Ghana cedis on the same side of the statement of financial position. After the transaction, the statement of financial position will appear as follows. Since some of the cash was taken and deposited in the business or bank account of the organization, the balance on the cash will reduce, and what will be left is 5 million Ghana cedis, whilst another asset in the form of bank or bank balance would have increased by 15 million Ghana cedis. So we see that the change only occurred at the asset side of the statement of financial position, but there is no change on the capital or the liability side. So one asset in the form of cash decreased, whilst another asset in the form of bank increased. So we still have the accounting equation being asset equals to capital. So the asset 20 million Ghana cedis is still equals to the capital 20 million Ghana cedis. January 3, purchase goods for resale 5 million Ghana cedis on credit from XYZ Enterprise. Here the effect is that an asset, stock of goods or inventory, is increased by 5 million Ghana cedis, and liabilities, creditor, that is XYZ Enterprise, increased by 5 million Ghana cedis on the other side of the statement of financial position. After the transaction, the statement of financial position will appear as follows. Now, we have acquired some inventory or stock, 5 million Ghana cedis, but we did not pay cash. Rather, we contracted a debt in the form of, or we bought on credit from our creditors. So a liability comes about. A liability is created, and the liability is 5 million Ghana cedis. So now we have the stock of inventory increasing by 5 million Ghana cedis, and liability in the form of creditors also increasing by 5 million Ghana cedis. So we'll still have the accounting equation being asset equals to capital, and now we have the liability of 5 million Ghana cedis. So the asset totaling 25 million Ghana cedis now will be equal to the capital and the liabilities totaling 25 million Ghana cedis, because there has been an increase in asset in the form of inventory by 5 million Ghana cedis. At the same time, there has been an increase in liability in the form of creditors by 5 million Ghana cedis. January 4, Kofi Nsia put his own motor van valued at 150 million Ghana cedis at the disposal of the business for use in the business. Here the effect is that an asset motor van is increased by 150 million Ghana cedis and capital is increased by 150 million Ghana cedis on the other side of the statement of financial position. The statement of financial position will therefore appear as follows. Now, what happened is that the owner of the business, Kofi Nsia, contributed extra capital in the form of his motor van. So he gave his motor van to the business to be used for running its activities. Now the motor van has become an asset of the business. So we'll find the the volume of the asset increasing by 150 million Ghana cedis. And the contribution, the capital contribution of the owner also increasing by 150 million Ghana cedis, because the owner has contributed extra 150 million Ghana cedis. So remember, the owner started with 20 million Ghana cedis and has now increased it by 150 million Ghana cedis through the donation or allowing the business to have the control and usage of his motor van. So the total capital is no more 20 million Ghana cedis, but 170 Ghana cedis. January 5, purchase goods for resale, 10 million Ghana cedis from Asempa Enterprise, paying by check. Here the effect is that an asset, stock of goods or the inventory, is increased by 10 million Ghana cedis, and another asset, cash at bank, decreased by 10 million Ghana cedis on the same side of the statement of financial position. So the statement of financial position will appear as an asset in the form of inventory increasing by 10 million Ghana cedis. If we remember, the balance on the inventory was 5 million Ghana cedis. So what it means is that the business used 10 million Ghana cedis out of its bank balance to purchase extra inventory. So the balance that will be standing on the bank account will be what? 5 million Ghana cedis, since 15 million Ghana cedis minus 10 million Ghana cedis will be left with 5 million Ghana cedis. Now, this 10 million Ghana cedis is increasing the stock of the inventory. So the inventory will increase from 5 million Ghana cedis to 15 million Ghana cedis. Again, this is happening only at the asset side of the statement of financial position. So the total on the asset side is still equating to the total of the capital and the liabilities. In this session, we show the effect of transactions on the statement of financial position and redrafted the statement of financial position after every transaction.